We've already established a quorum, so we are operating as a committee. Whenever you're ready, sir.
Okay. Great. Thank you, Mr. Chair and Senators. This is AB 260. It is a mortgage reform bill designed to bring trust and security back to California's mortgage market, protect borrowers from the most abusive lending practices that cause the foreclosure crisis, and reassure the secondary market that loans borrowed in California are sound. Specific provisions of this bill include banning negative amortization loans, regulating prepayment penalties, and prohibiting the steering of borrowers into higher-priced loans that are more costly than those for which they would qualify. This bill also enacts a strong fiduciary standard for all mortgage brokers and prohibits lenders and brokers from making false and misleading statements relative to terms of a subprime loan and establishes penalties to prevent abusive subprime lending. Mr. Chair, you voted for this bill last year. We are working with the governor's office, and we believe we can get to a compromise with the governor's office. And so would respectfully request that this bill pass out of committee so we can continue working with the governor's office to get a bill signed. I have witnesses here in support.
Sorry, I apologize.
Thank you.
Mr. Chair and members, Caitlin Vega for the California Labor Federation. We are sponsoring this bill this year. Last year, we were part of a coalition of consumer organizations that worked very closely with the bankers and with all interested parties to arrive at what is now a compromise measure that we see taking on some of the most important protections for our members. Many of our members were entered into loans they did not understand and could not afford, and then faced losing their homes. We think that this affords them some important protections, and we're here in strong support. Thank you.
Thank you. Any others in support?
Mr. Chairman, Paul Leonard, Center for Responsible Lending. While we would have liked to have seen a stronger bill with a broader scope covering a broader array of loans, we nevertheless support the bill and as a providing some important protections and hope to get it enacted and signed by the governor this year in its current form.
Thank you. Any others in support? Testimony in opposition? Seeing and hearing none. Any questions?
I have a question, Mr. Chairman. How does this, with respect to this bill and the Federal SAFE Act and California's conformity to the SAFE Act, what is the need for this bill?
The bill provides substantive protections for consumers, imposes duties on brokers, fiduciary duties. It is not inconsistent with the Federal SAFE Act, and we believe this bill builds upon what the SAFE Act would do here.
Were you opposition?
Yes.
Oh, I called you. You must have come just now. Ladies first.
Mr. Chairman, Colleen Monahan with the Department of Corporations. We are here opposed with the amendments to Assemblymember Liu's bill. We've provided the author's office amendments, and we're continuing in discussions about amendments. A lot of the language overlaps. We're working on fiduciary duties and some other provisions where we have common ground in the bill. One of our concerns is the structure of the high-cost mortgage loans having differing provisions. We feel at this point regulations in that area, it's somewhat a moving target. There's so much going on at the federal level that if we define here and specify acts and practices in this particular arena in California, we're soon going to be out of sync with the federal government. There's legislation on the table right now, H.R. 1728, passed by the House. Chairman Dodd has indicated an intent to address subprime lending reform this session. The Obama administration has released it as part of its financial regulatory reform program and part of the Consumer Financial Protection Agency Act of 2009. So we're concerned about moving in a different direction on this area. In addition, at this point in time, we see a lack of lending in the subprime market. And we're concerned about defining this lending space and there not being a market there and having the liability and other cure provisions in this bill discourage lending in that market structure. And at some point, when the market recovers, we believe that there is ways for responsible lending in that market segment, and that the state will want to see lending resume for persons who may not be prime or Alt-A candidates, but maybe higher credit risks, but still should have an opportunity to purchase housing. In addition, we'd like to mention that the causes of the market crisis are still being studied, and there's a lot of discussions about what occurred in the marketplace and what were the causes. And while there have been abuses in the subprime marketplace, there's other factors that are being looked at as causes of the current market condition. Lack of equity, lack of skin in the game or down payment. States with default-friendly laws are seeing higher foreclosure rates. And so we're concerned about perhaps further burdening this segment of the market, creating liability in a manner that discourages participation in this segment as a market reaction when currently there is a liquidity crisis. And as you know,
Can you try and wrap this up, please, a little bit?
Well, as you know, there's a lot of proposals on the table to consolidate the department, to look at the way the late lending programs are structured. There's a Safe Implementation Act, and so we're looking at the lending reform proposals within that new paradigm. But as I mentioned before, we have provided language to Assemblymember Liu's office, and we look forward to working with him on it. We thank him for all the leadership he's shown in this area, and look forward to working with him on this issue.
Thank you.
Thank you.
Yes.
Tom Poole with the California Department of Real Estate. In the interest of time, I will just tie my comments to Colleen's at the Department of Corporations. I would like to point out quickly that this bill is nearly identical, or is identical to AB 1830 last year, which was vetoed. We are working with the author's staff to see if we can work out some kind of compromise, but we are at the moment opposed unless amended. Thank you.
Thank you. Opposition?
Mr. Chair and members, Mike Belote for the California Mortgage Association. We have been talking about this bill, respectfully, good author, for 2 years. But in 2 years, a lot changes, and we have a different world than we had 2 years ago in terms of loan availability. It seems to us, in the broad picture, the least of our problems is high-cost mortgages, and so the need to create a new layer of regulation when we've already done enormous work at the state and federal level is not evident to us. With the chair's permission, just one brief paragraph, ironically out of today's San Francisco Chronicle, and the article is headed, "Tough to Refi Even with High Incomes." And the first paragraph says, with more than $300,000 in combined annual income, tens of thousands of dollars in the bank, and credit scores that top 800, Jennifer France and her partner would seem like ideal candidates for a mortgage refinance. They were summarily denied. Right now, the big problem is the lack of mortgage credit. It is going to make it hard for your constituents in high-cost areas like yours and Senator Keogh's and Senator Padilla's to refi their loans, which are about to go up. My members in the California Mortgage Association are pulling out of residential lending. They are focusing on commercial lending because they simply cannot make money in residential lending at this time in the private mortgage market, and the institutional loans, as illustrated in today's Chronicle, are not available. It seems to us that we're in a different time. There are lots of problems with the bill, but the big one that we've pointed out now for 2 years is simple. It encourages litigation against lenders and brokers because it provides for attorney's fees only to the prevailing plaintiff. That is not a trivial item. It will encourage litigation. It's very difficult to figure out who the prevailing plaintiff even is in many cases, and it allows the possibility of very small recovery and very large attorney's fees. So we've talked to Mr. Liu and his staff and the sponsors and proponents about the bill and about the problems, and if the bill moves forward, we'd like to work on them. But here's our message. You ought to be more concerned about mortgage availability. We do not need, in our view, extensive new requirements on loans.
Any others would like to testify in opposition? Do we have any questions from the committee? I see.
Thank you, sir.
Good afternoon.
My name is Ken Jones. I'm here representing the California Association of Mortgage Brokers. We have 4 points of opposition against AB 260. I'd like to just speak to one today, and that is the anti-steering clause that exists for the higher price loans. The current clause indicates that if you have a higher priced loan, you may not steer a customer to a higher cost loan. That would be a prohibition, a violation of AB 260. As a mortgage broker, we are not quite clear on what that means, the difference between a higher cost loan. It could be measured through APR. It could be measured through through the fees that are charged. It could be measured by a number of different metrics. What we see is APRs change based on term of a loan or type of a loan. So we find it very difficult to understand how to tell our members how to avoid violation by steering to a higher cost loan when we don't understand how to define that. Now, we have spoken with Senator Liu's office and some of the sponsors, and I think that they see this as an issue. I hope they do. That's my opinion, is that they do. Although we've yet to see any suggestions on how to fix this language. We've offered some suggestions that came from the federal side from an older bill, H.R. 3915, and have yet to hear whether those changes will be integrated. Thank you.
Thank you.
Mr. Chairman and members, I'm Stan Wigg with the California Association of Realtors. We're also in opposition to the bill. Our concern is twofold. First, we are concerned about the private right of action that's in the bill, but secondly, we're concerned about the essentially obsolete terminology of the bill. The bill speaks to a situation where we have mortgage loan brokers who are being regulated along with, but slightly differently than other kinds of mortgage loan originators. In a year, based on the chairman's own bill and based on Mr. Nava's companion bill, we will be regulating mortgage loan originators. This bill is silent on that. It's obsolete before it becomes effective. We respectfully suggest that the committee hold this bill, revamp the bill into a bill that speaks to the duties owed by mortgage loan originators, does so in a way that creates a level playing field between all of the loan originators, and then also does not encourage frivolous litigation or speculative litigation. For those reasons, we ask for your no vote on the bill.
Thank you.
Thank you.
Any others in opposition? Seeing and hearing none, questions by the committee members? Mr. Liu, would you like to close?
A little bit of history. So we sent AB 1830 to Governor last year. He vetoed the bill. About 2 months later, he introduces his own version, which is about half the bill. Plus, he had other provisions that actually went further than the bill did. So we're actively working with his office to negotiate, and we believe we can get to a compromise. And with that, we respectfully request an aye vote to let us keep the bill moving forward. And we actually have some language in the council to deal with enforcement issues. And if the committee has problems with that, we're willing to make some changes now if any member wants to.
Yeah, Assemblymember Liu, did you have an amendment that you said that you wanted to offer up on the private right of action portion?
Sure. If it would help the bill move forward, I'm willing to take out the private right of action, which was one of the governor's main concerns about this bill last year. And I'm committed to not sending him the exact same bill. So I'm willing to do that if it's the will of the committee.
So be it. Yes, sir.
I mean, this bill was held in committee last year, was it not?
It was passed out.
But it was held to begin with by Mr. Machado, and then there was a exchange of hostages, I believe, was would be the gracious statement.
Our consultant, she was here and I wasn't. You can clarify.
Senator Cox, and I think as many of the people in the audience know, I was right in the middle of that last year. Last year, this committee passed a version of AB 1830 that looks very different than the version that is before the committee today. That bill was subsequently amended, moved to the floor, pulled back into this committee, and passed in substantially the same form it is before the committee today. So last year, this committee did pass a bill that was virtually identical to the version before the committee today.
So it's a motion as amended. Yes, motion do pass as amended. With amendments. Take it in judice.
That's your motion?
That's your motion. Okay, call the roll.
Calderon?
Aye.
Calderon, aye. Cogdill? Cogdill, no. Correa? Cox? Cox, no. Flores? Flores, aye. Harmon? Kehoe? Kehoe, aye. Liu? Lowenthal? Padilla? Padilla, aye. Price? Runner? No. Runner, no. Correa, aye.
Okay, that's 5-3, so we'll keep the roll open on that. We're going to mix the order up just a little bit because we have some members that have to leave. Oh, I'm sorry. You only get one. I don't know who authorized this. Please, go ahead.
Thank you. AB 350 creates a comprehensive regulatory and enforcement program for debt settlement companies where none exist today. As the economy continues to slip deeper into recession, this service becomes an even more critical piece of the overall economic solution. Debt settlement is a mechanism by which consumers can avoid bankruptcy, reduce their debt, and return to a firm financial footing. The bill before you today is a product of over 2 years of work and encompasses extensive input from many stakeholders, including consumer groups, providers, and regulators. Briefly, the bill requires all debt settlement companies to pay a fee and register with the state of California. It also provides significant oversight and enforcement authority to the Department of Corporations. It provides strong false and deceptive advertising provisions, mandates extensive disclosures by debt settlement companies, and allows the consumer to cancel an agreement for any reason within 5 business days and get a full refund, and establishes an internal complaint process to ensure their concerns are addressed quickly and effectively. We respectfully request an aye vote. Have witnesses here in support.
Thank you. Support?
Mr. Chairman, members, Paul Gladfelty representing the Association of Settlement Companies. We are a trade association who represent debt settlement companies. Let me make a couple of comments first and foremost. This is an industry that currently is not regulated in the state of California. We have been working on this issue, as Assemblymember Liu has indicated, for the last couple of years. We've worked with Consumers Union and others. We continue to work with them on drafting a bill that really accomplishes 2 things, one of which creates a mechanism that allows the industry to go forward with a set of rules that they can live by, and 2, to protect consumers from bad actors out there in the community. And with that, we think that this bill strikes a good balance and would appreciate your aye vote. Thank you.
My name is Gene Urban. I represent USOBA, United States Organizations for Bankruptcy Alternatives. We, too, are also an industry trade association. We have witnessed an explosive growth in this industry. It is unregulated, and there are too many unscrupulous practitioners. We think this is an aggressive and progressive licensing scheme, and we would ask you to support it. I'd like to make one point so that we understand exactly what we're talking about. The bill is designed, the industry is designed, the practice is designed in such a manner that we do not have direct access to consumers' money, neither directly or constructively. We are their agent. We reach out to the judgment creditor, we talk to them, and then we convey it back to the consumer. Is this acceptable or not? We've intentionally designed it to avoid the types of problems that you may think are inherent in this, specifically a licensee absconding with a consumer's money. We think it's well designed, well conceived. We ask for your yes vote. Thank you.
Mr. Chair, Honorable Committee, my name is Wesley Young. I'm here on behalf of the Association of Settlement Companies, also known as TASC. We're an association of over 200 members. About 75 of those are based here in California. We are in support of this bill as well for the reasons already discussed. We agree that this consumer protection is needed. We also believe that this helps preserve a vital consumer option for consumers to deal with their unsecured debt. And I do want to make sure that's clear. We do not deal with mortgages only in unsecured debt. This has been a bill that's been in place or that's been ongoing and has had significant amendments over 3 years, and we support it. Thank you.
Thank you very much. Any others testify in support? Seeing and hearing none. Any opposition to this legislation? Please come forward. You can make some room for the incoming. Thank you. Please.
Good afternoon, Mr. Chair and members. Karen Becker from the Center for Responsible Lending. We're opposed to AB 350. First, I do want to say that I appreciate the willingness of the author as well as the sponsors in working with us and with Consumers Union. We do appreciate and welcome the amendments that have been taken to date, but unfortunately, the amendments that have been taken don't address any of the most significant concerns that we do have with the bill. Although AB 350 would regulate what's arguably an unregulated industry right now, it actually would enshrine a fee structure that incentivizes and rewards bad conduct and fails to include sufficient safeguards against it. By definition, the debt settlement service providers purport to help consumers get rid of their debt by settling debt for less than 100 cents on the dollar. Although the business model is premised on settling debt, the bill does not tie compensation to such settlements, and in fact, the bill doesn't require any settlements or even efforts to engage in such settlements. What the bill does do is provide a very high fee structure. Right now, consumers would be required to pay 5% of their debt up front. So for an average debt of, say, $20,000, that's a $1,000 fee right off the bat before anything has been done, as well as a total fee of 20%. These fees, if you look at the other states that have regulated these issues, these fees are the highest fees of any state in the country. Especially with regard to the upfront fee, there's only one state that has a 5% upfront fee. There are 10 states that actually cap the fee at a specific number, and those numbers range from $50, some say $200. The highest ones of those states are $400. This bill would allow an upfront fee of $500 for every $10,000 of debt upfront.
Wait, can I get some clarification? So you're saying that in other states, they do not allow more than a 5%, or their upfront fee is less than 5%?
Right. One state, Montana, allows a 5% fee. 2 states...
Wait, upfront fee or commission on the debt? An upfront fee of 5% of the debt. So... Setup fee.
Right. 2 states, sorry, 2 states would allow 4%, but the great majority of states that regulate it, which are 10 states, just have this limited fee cap of a specific number.
What do the other states charge as far as total percent of the debt I mean, this bill is asking for 20% of the amount of the debt. What do the other states provide?
This also varies. The 20% is also the highest of the states in terms of the total amount. Other states range. There are some that only allow certain monthly fees of like $10 per creditor and some percentage of the amount saved. As far as the ones that provide for a total fee, they range. Utah is 17%, Colorado 18%, Delaware 18%. Minnesota, which has a model that we like a lot, has a small upfront fee and then allows $50 to $60 per month, and on top of that, some percentage of the debt that's actually settled, so that it's tying it to that. And it requires, as well, in Minnesota, you can only get 40% of the total fees before you start engaging in actual settlements, and so it limits the fees to ensure that the company is actually providing the service that they're promising.
Okay, thank you. Were you done?
I have a few more comments.
We're
Sorry.
going to lose members here real soon. That's
Okay,
why I'm asking.
I'll wrap it up quickly. As we've been discussing, I just want to, the business model provides compensation without the service provider actually providing what it's doing. So not surprisingly, there's a lot of abuses in terms of this, of people taking the upfront fee and doing nothing. So while our first preference would be to tie compensation to the actual settlement, if that's not done, we have a few changes that we would urge. First would be a reduction of the fees as well as spreading out the fees over a longer period of time. Right now, it's the upfront. The setup fee is in one payment, and the full fee is paid over half the program. The other protection would just be to ensure that there's front-end and back-end protections to make sure that the consumers who are getting enrolled are people who can benefit from the program, and that if they don't, that they have some recourse at the end. Thank you.
Thank you. I'm going to ask you not to be repetitive. If you have any new information to offer, please do.
Yes. Good afternoon, Mr. Chairman, members of the committee. I'm Norma Garcia, Senior Attorney with Consumers Union. We share the concerns that the Center for Responsible Lending has just expressed, and just want to mention other important issues that need to be dealt with that haven't so far been resolved through negotiation with the author and other stakeholders. And that is the additional issue of requiring that that the product be suitable for consumers, that the debt settlement companies make a determination that the product is suitable for the consumer, that the consumer has the ability to save the amount of money necessary to put into the savings program so they can actually derive benefit on the back end. What is so troubling about these products is that consumers are obligated to pay fees on the front end with no promise of any benefit on the back end. And with that, we would ask for your no vote.
Thank you. Any others in opposition? Any questions from members? Seeing and hearing none. Bill's been moved. Call the roll.
Calderon.
Aye.
Calderon, aye. Cogdill. Cogdill, aye. Correa. Aye. Correa, aye. Cox. Cox, aye. Flores. Flores, aye. Harmon. Kehoe. Aye. Kehoe, aye. Liu. Lowenthal. Padilla. Aye. Padilla, aye. Price. Runner. Aye. Runner, aye.
As 8 votes, that bill is out. Okay, we're going to lift the call before we go to Mr. Duvall. We're going to lift the call on item number 2, Nava.
Can we have a
I'm sorry, item number 1.
As we're doing that, I think
you can come up, Mr. Duvall, if you'd like. Yes.
We're lifting the call on the bill the way it's currently drafted, correct? With the amendments that were taken?
Correct.
I think
we didn't take any amendments on this bill.
Okay, okay. But it's the bill as presented.
Yes.
We've had some discussion, and some of our members have had discussion in this idea of trying to maybe amend in an urgency, which would then, we think, do kind of what we would like to see in terms of a fuller look as this issue is developed. And so I guess the question would be, if you bring it up the way it is now, I assume what you're going to want to do then, because I don't think you've got the votes to do it the way it is right now, that it would fail. So would it be proper for us to propose a substitute motion which would include an amendment in regards to an urgency to be added to
Are you making that motion?
I would make that motion.
Is the author agreeable? No objection. Yes, Mr. Cogdill.
Just to follow up on that, I'm wondering, Mr. Nava, are you willing to commit that you will not remove the urgency clause at any point during the process, so that this will be a 2/3 vote bill?
I'm a man of my word, Senator.
All right. Just wanted to get that on record. Thank you.
May the record show that Mr. Nava is a man of his word. Okay, motion's been made.
Okay. Mr. Chairman, was that a motion on that?
That was a motion.
Substitute
motion for an urgency.
No, okay, not on Mr. Nava being an honorable. I didn't hear a second.
You second that?
Oh, yes.
Okay.
That's in the assembly, you need that.
I'm going to call the roll on the substitute motion first. Open the roll.
Okay. Calderon.
Aye.
Calderon, aye. Cogdill. Cogdill, aye. Correa. Correa, aye. Cox. Cox, aye. Flores. Flores, aye. Harmon. Kehoe. Kehoe, aye. Liu. Lowenthal. Padilla. Padilla, aye. Price. Runner.
Aye.
Runner, aye. 8 votes, sir.
That has 8 votes, so that motion passes, or that measure passes. Motion passes. Now we're going to open the roll on the bill as it is with the urgency clause.
Mr. Chairman, I'm prepared to... No, the other one was just the urgency.
That was a motion to add the urgency to the bill. Okay?
Mr. Chairman, I'm prepared to support the underlying motion here with the proviso, Mr. Nava, that we get the information that we've asked for, which has to do with some greater degree of specificity than was provided in any of the analysis. In other words, revenue and expenses and all that kind of stuff.
We understand the Senator's concern, and we've made a commitment to compile as much of that information as possible. It's important to get the Senators to a place where they see the architecture, they see the consequences of the decision, and give you some more comfort.
Open the roll. On the bill.
Okay.
With the urgency as amended. It's the same bill. It's not a new bill. It's the same bill, so we're removing the call. You're removing the call.
Okay, great. Okay. Calderon?
Aye.
Calderon, aye. Cogdill? Cogdill, aye. Correa? Correa, aye. Cox? Cox, aye. Flores? Flores, aye. Harmon? Kehoe? Kehoe, aye. Liu? Lowenthal? Padilla? Padilla, aye. Price? Runner?
Aye.
Runner, aye. Yes.
That has 8 votes. That measure is out. Okay, Mr. Duval, I'm a man of my word, and here you are. Now you're presenting, as I understand, we have discussed you presenting for Assemblymember Delatorre.
Yes, sir.
Since he had to make a flight. Oh. Having no objection to that, please proceed.
Okay, this is Hector's bill right now, Mr. Chair and members. It's Assembly Bill 591. It has received bipartisan support in the Assembly. There are 2 parts to the bill that will protect consumers. The first part creates deterrent to bad actors by increasing the current $1,000 fine that was set up in 1990 to at $5,000 for paying or receiving a kickback for referring a customer or services or goods for which your car insurer reimburses. The second part will be analyzed by the Senate Health Committee and ensures the information about health plans and health insurance are readily accessible by customers. The bill will require both departments to track marketing names following for the customers and more readily accessible information on the health plans. I urge an aye vote.
Well done. Thank you very much. Support? Opposition? Questions from the committee? Is there a motion? So been moved. Call the roll.
Calderon?
Aye.
Calderon, aye. Cogdill? Correa? Cox?
Go.
Cox, no. Flores? Harmon? Kehoe? Liu? Lowenthal? Padilla? Padilla, aye. Price? Runner?
Correa, aye.
Correa, aye. That's 3.
It's 3-1. We'll keep the roll open. Mr. Duval, you can now present on AB 800. Thank you for your patience.
Thank you. This is an insurance omnibus bill, and following what it does. Enables the California Department of Insurance to fully carry out its producer licensing activities electronically. Online applications are timely, more accurate, cost-effective, and provide environmental-friendly way to...
The chair would like to ask a question.
Oh, right now.
Mr. Duval, is this a bill in search of a problem?
This is a bill that saves money for the state to process this licensing, and it's sponsored by the Department of Insurance.
I'd like to move this bill.
So been moved.
The committee analysis has indicated some concerns over the requirement online. In response, I proposed a possible fix that would allow the applicant to request an exemption and the use of paper application. I urge an aye vote.
Thank you very much. You're also accepting an amendment?
Yes, sir.
To this bill? Very well. So be it. Any testimony in support?
David Link with the Department of Insurance. Urge your aye vote. Keith Kuzmich is here from our licensing division if you have any questions.
Thank you. Anyone else in support? Any testimony in opposition? Seeing and hearing none. Questions by members? Do we have a motion? We already have a motion. Call the roll.
Calderon?
Aye.
Calderon, aye. Cogdill? Cogdill, aye. Correa?
Aye.
Correa, aye. Cox?
Aye.
Cox, aye. Flores? Harmon? Kehoe? Blue? Lowenthal? Padilla?
Aye.
Padilla, aye. Price? Runner?
That's 5 votes. You need 2 more. We'll keep the roll open.
Thank you.
Thank you, sir. Mr. Nava, thank you so much for being so gracious with our other members. Appreciate that. Helped us get some of our business done.
I'm a gracious man of my word.
You're gracious and your word. We have item number 2 that you're going to present, AB 34.
Thank you, Mr. Chair and Senators.
Yes.
AB 34 will bring California in compliance with the requirement of the Federal Secure and Fair Employment of Mortgage Licensing Act, or the SAFE Act. On November 12th, the Assembly Banking and Finance Committee conducted an informational hearing, heard from a panel of expert and stakeholders regarding the SAFE Act and how it is we have to implement this at the state level. We are required to implement provisions of the SAFE Act. Failure to do so will permit HUD to step in and essentially take over and apply their rules and regulations to state licensees. Under the requirements of this bill, all mortgage loan originators must register with a nationwide mortgage licensing system and registry, pass a comprehensive background and criminal history check, disclose on all advertising their unique identifier, meet minimum continuing education requirements, and pass a comprehensive licensing test with a score of at least 75%. These requirements will demonstrate the provisions of the bill provide landmark regulation and consumer protections for the California mortgage market. Again, it is necessary to pass this legislation in order to make sure we are in compliance with federal law. There is no opposition. I would ask for an aye vote.
Bill's been moved. Any support that would like to testify?
Thank you, Mr. Chairman. I'm Stan Wigg with the California Association of Realtors. We do support the bill. We think this is a minimally disruptive approach to implement the Federal SAFE Act, and this is what we have to do. If we don't, the feds will take over and foul our nest for us. Thank you.
Thank you. Any others in support?
Kid Jones from the California Association of Mortgage Brokers. We believe this is an excellent piece of legislation and support it as written.
Thank you. Opposition?
Concerns.
Concerns. That was in the other bill he had.
I can't do concerns.
Just concerns.
Thank you, Mr. Chair. I'm James Zarecki with the Law Foundation of Silicon Valley, and just to be clear, for purposes of this bill, I'm only representing the Law Foundation's position on this. So we represent many consumers who've been victimized by predatory lending, and we, unfortunately, and I did articulate this at the hearing that was referenced earlier that Mr. Nava held, that we've seen a pronounced lack of effective enforcement by the current agency charged with enforcing consumer protections, and we're concerned that this law is a missed opportunity to really increase consumer protections and make our agency more effective. One issue that it was raised earlier is that the SAFE Act provides 2 ways to get consumers protected from shady operators who will take advantage of them, go out of business, and then leave nothing for them to recover. We see this all the time. We're right now fighting tooth and nail in bankruptcy court to get our consumers who've been adjudged to have been ripped off to the tunes of hundreds of thousands of dollars, to get them anything out of people who crawl back under rocks once they're caught with their misdeeds. They go into bankruptcy court, we can't touch them. There is the recovery fund. We found the DRE recovery fund to be extremely onerous, very hard to get into. It has a requirement that you actually have a finding of liability, which if you settle a case, you're not going to have. It's a very ineffective tool. We think net worth or bonding are very appropriate to be considered. I know the industry is probably going to oppose that. I think I heard that articulated earlier today, but we think it's a very good idea. And also, the state lags behind licensing on licensing fees, especially given the high dollar value of the loans that are originated here. We need to make this higher. We don't want to exclude lower income people from the industry, but you do have to have a certain amount of financial wherewithal to do this business. And so we suggest a sliding scale approach to get where it's an appropriate level of net worth, bonding, and licensure fees. So those are some of our main concerns. Honestly, if HUD came in and did this work for the state, it would save the state some money. And to be honest with you, again, we have not had a good experience with the current consumer protections with state agencies. I don't want to see the state out of compliance with federal law for its own sake, certainly. But I will say that we're not content with what we've seen. We'd like to see some improvements. This is a missed opportunity. We're getting barely over the bar. That's all we're doing here. We're clearing the hurdle. Our leg is sort of hitting it on the way over. We're not doing more for consumers than we absolutely have to, and if anything we've seen in the last few years, we need to do more. So we would urge some additional protections, but thank you for your time.
Thank you very much. Anyone else in support? I'm sorry, in opposition? Okay. Any questions from members of the committee? Is there a motion?
So moved.
So moved. Call the roll.
Cogdill? Cogdill, aye. Calderon?
Hold on.
Okay.
Oh, that's 34. Okay. Aye.
Calderon, aye. Correa?
Aye.
Correa, aye. Cox?
Aye.
Cox, aye. Flores? Harmon?
This is
Kehoe? Aye. Kehoe, aye. Liu? Lowenthal? Padilla? Padilla, aye. Price? Runner?
Aye.
Runner, aye.
That's a sufficient number of votes, 7. That bill is out. Congratulations.
Thank you,
One
Mr.
more?
Chairman and Senators. One more bill. This is Assembly Bill 764, the Homeowner Fraud Prevention Act. California homeowners facing foreclosure have become vulnerable to scammers, con artists, and thieves. These predators charge our homeowners a fee which can reach several $1,000s with the promise of a loan modification. Most often, these predators ask for an upfront fee or even a non-upfront fee loan modification, which is why I believe AB 764 will save our financially distressed homeowners thousands of dollars by prohibiting any person, including attorneys and licensed real estate brokers, from collecting a fee until a loan has actually been modified. It is important to point out these scammers are evolving. Since this bill was introduced, more and more loan modification so-called specialists are now advertising no upfront fee loan modifications, which is why it's vital that these people are not paid until the loan is modified. All of the services offered by these entities, a homeowner can accomplish for free. Tasks such as calling their lender, compiling the paperwork, writing a hardship letter, and following up. Those prohibited under AB 764 from taking a fee have no more of a success rate than the actual homeowner of getting a loan modified. The main goal of AB 764 is to close the loopholes so that homeowners are not continually being ripped off. This bill will stop the charging of fees for little or no work, as well as ensure that our homeowners receive an actual modification before a fee is received. This bill contains a number of provisions. It requires those wanting to charge a fee for loan modification to notify the homeowners that loan modification services can be received for free through a HUD-certified counseling agency or their lender. And it prohibits advertisements from using words, letters, initials, symbols, or other devices that are similar to those used by a governmental agency or a nonprofit entity. I want to reiterate, I strongly believe the process of modifying a loan should and can cost a homeowner nothing. I respectfully ask for an aye vote.
Thank you, Mr. Nava. Any support testimony?
Good afternoon, Mr. Chairman and members of the committee. Anthony Williams with the Wada Williams Law Group on behalf of the State Bar of California. State Bar, again, supports this bill because we believe that it will have the salutary effect of preventing and removing the incentive to do fraud, while at the same time ensuring that these services are still available. The State Bar has been inundated with complaints from consumers about lawyers who have frankly ripped them off. And we believe that this bill will prevent that kind of behavior and allow us to continue to provide services to the consumers. Thank you.
Attorneys will be able to continue to receive their fees in advance?
No, they would not.
They would not. I see.
Yes.
Mr. Chairman and members, Brian Augusta on behalf of the California Reinvestment Coalition. Our organization is in strong support of this bill. When we go out and talk to our consumer counselors out in the field, they continue to be swimming in borrowers who have come to them complaining that they have contracted for loan modification services that they have paid a good sum for, and for which nothing has happened, and they've ended up in foreclosure in any event. And we know that many times these upfront fees result in a phone call or maybe a review of a file and nothing more. The vast majority of our counselors tell us that it never resulted in any kind of modification or assistance to the borrower. This bill will help deal with that. It does the same thing that a broker is faced with in making a loan. If you make a successful loan, then you're entitled to your fee. In the same manner, this bill says if you succeed in modifying the loan, you're entitled to your fee. And we think that's the best approach to deal with this persistent number of scams that are going on that are defrauding homeowners with their last few dollars who are desperately trying to hold on to their homes. So for all those reasons and the reasons that I think you'll hear from others, we urge an aye vote.
Thank you.
Jim DeBoo on behalf of the City of Los Angeles. We have over 8,000 notices default pending. Those folks are ripe for this type of abuse, and we would strongly encourage the committee to ask for an aye vote. Thank you.
Thank you very much.
Mr. Chair and members, Caitlin Vega for the California Labor Federation, also here in support. We are continually hearing from our members who have been scammed and who need this kind of protection, so we're here in strong support. Thank you.
Thank you. Yes, Mr. Leonard.
Paul Leonard, Center for Responsible Lending. We support the bill.
Thank you. You again?
Me again, I know. No, it's like I'm working for the mortgage brokers or something. So this is a very important bill. One thing I would suggest is that you might consider making urgency, because we not only need this now, we need this 6 months ago. I don't know if that's feasible or not, but I think it's very important. I just want to give a little example of why. We have a notice here from the Obama Plan Loan Modification Specialist that one of our clients got with the HUD logo on it. People are just out there doing all sorts of outrageous things to take people's money. We had 2 clients going to, I need to mention this, they went to 3 licensed entities, state licensed entities. It's been articulated by the opposition that this is a problem only in the unlicensed area, so we don't need to be punishing, quote unquote, licensed people, but our clients are ripped off by people with licenses from the state of California, paying $2,500 or $4,500 up front. The loan modification person makes exactly 1 call to the lender, absolutely nothing happens. They tell folks to stop paying your loan. So they not only don't help the person, they get them in a worse situation. One of our clients is losing his home in a trustee sale this week. He's trying to avoid it with a nonprofit. He could have done that in the first place. Had this bill been in place, he would have been informed. There are resources out there available to you to get help. You don't have to pay up front these outrageous fees. So this is a very important bill. We urge your support, and thanks very much to the author for bringing this.
Ronald Coleman on behalf of California Acorn. We're also in strong support of the bill.
Norma Garcia, Consumers Union. We're in strong support of the bill, and I just wanted to raise one point here. In May of 2009, there were over 90,000 properties in foreclosure in the state of California. That's a lot of Californians in trouble who could really benefit from legitimate counseling about whether or not a loan modification is possible. They don't need their attention diverted by scam artists who are trying to distract them from legitimate sources of information. We ask for your aye vote. This is a very important bill. Thank you.
Thank you very much.
I would indicate that there are amendments that we are prepared.
Yes, I was going to bring those to everyone's attention, but do we have any others that would testify in opposition or support? Support or opposition?
Opposition.
Opposition.
Mr. Chairman, members, I'm Stan Wigg with the California Association of Realtors. We're in opposition to the bill as it currently stands. We share the supporters' concern about fraud, the rip-off artists who are soliciting people for loan modifications, and without any regulation, without any structure whatsoever. We would suggest that the bad guys are breaking the law now. They don't need to have a new law to break. They're breaking the law now. What we suggest is that there is a class of relatively legitimate licensees out there, real estate licensees. If they go to their regulator, if they're willing to expose their contract to the regulator, have the regulator look at them, identify them as somebody who's in the business, we think those are the legitimate ones. You ought to preserve their ability to have flexibility in the way they collect their fees. That's the guts of our opposition. We think that there are legitimate licensees out there, and we should be able to continue that business model. For that reason, we ask the bill be held.
Yes, sir.
Tom Poole with the California Department of Real Estate. We regulate the real estate licensees. We're not in formal opposition. We have one concern I want to express, but just to reiterate the problem that we are seeing, we are kind of the forefront of the issue. Last year at this time, we had about 10 complaints involving loan modification scams. Currently, we have over 800. That number is growing daily. We've taken over 200 administrative actions to date, just in the last 8 months. A majority of these folks are unlicensed. We do take actions against folks that require a license, and loan modification is something that requires a real estate license. 181 desist and refrain orders. Again, that number is growing weekly. We actually post the offenders on our website so consumers can go and see who we've taken action against. The one concern that we have is this unlevel playing field that the bill creates, and that is the treatment under which a real estate broker can collect a fee versus an attorney. I do understand from the author that they're willing to level the playing field, and with that, we would be neutral on the bill.
Thank you very much.
That was the purpose of the amendments.
Yes, I'm sorry. I was going to bring those up after we were done with them. Are we done with opposition? Okay, while you're coming up, I just wanted to bring to people's attention, we have proposed amendments by the author addressing a lot of these problems. Not all of the opposition's concerns, but the paid for by borrower language containing 4 and fewer dwelling units language, and A, D, and E of the analysis are addressed in your author's amendments, and we'll accept those as
Thank you.
As your author. Please proceed.
Thank you. My name is Ken Jones, representing the California Association of Mortgage Brokers. We support the intent of this bill and agree with all that we've heard before, that this is a serious issue, and there's a lot of abuse that's taking place that needs to be regulated. Cam also agrees with Mr. Weig, who was speaking before, in that there is in place a licensing structure so that licensed Department of Real Estate originators who go through the Department of Real Estate are able to collect upfront fees. This bill would prohibit any upfront fees from the private sector. That's my understanding. I had an experience that I'd like to share just from this weekend. Briefly. A gentleman came to me who just did not have the wherewithal to go for his own modification. He wants to hire someone to process it. My company doesn't do it. It's very time consuming. You can spend hours and hours and hours trying to work with lenders to get something done. He needs, or there should be a place for him to go if there's not enough public outlets for him to be able to go it. So I would just suggest on the part of Cam that amendment to the bill that would allow a structure through which reasonable upfront fees could be charged by licensed and regulated personnel to respond to the needs of people who are not in the position to prepare their own modification documents. Thank you
very much. Any comments from the committee? Yes, sir, Mr. Correa.
Just to the author, could you define a modification? What constitute that action that would then trigger the ability to collect those fees?
Well, we're trying to focus on the successful modification of the loan. So that would mean a change in the terms of the loan that is of benefit to the homeowner.
But there is no definition in the bill, but that's obviously the intent is to go after them. Okay, do you have a motion? As amended? So moved. Call the roll.
Calderon?
Aye.
Calderon, aye. Cogdill? No. Cogdill, no. Correa? Cox? Cox, no. Flores? Harmon? Kehoe? Aye. Kehoe, aye. Blue? Aye. Lou, aye. Lowenthal? Aye. Lowenthal, aye. Padilla? Padilla, aye. Price? Runner? No. Runner, no.
Okay, that's 5 to 3. We'll place a call on that. We are going to remove the call on the other bills. We have some more members here, and then we'll ask Ms. Torres to come on up. You can come up as we're doing that. Just go through the list, please.
Yes.
You missed the consent calendar? Oh, well, let's do the consent calendar.
Okay. Calling the absent members. Flores? Consent calendar. Flores? Harmon? Lou? Aye. Lou, aye. Lowenthal? Aye. Lowenthal, aye.
Place the call on that.
Still on call. Yeah. It's 10 votes.
I think Dean's still around.
AB 33, calling the absent members. The vote is 8 to 0. Flores, Lou, Lowenthal, Lowenthal, aye. Lou, aye, and Price, and that is 10 votes.
Okay, that bill is out.
AB 34, and the vote is 7 to 0, calling the absent members. Flores, Harmon, Lou, Lou, aye. Lowenthal, Lowenthal, aye, and Price. And that is 9 to 0.
Hold on. Yeah, let's keep the rolls open until we're done with the business here.
AB 260, the vote is 5 to 3, calling the absent members. Harmon, Lou, Lou, aye. Lowenthal, Lowenthal, aye. Price. And that is 7 to 3.
7 to 3.
AB 299, vote is 9 to 0, calling the absent members. Flores, Harmon, Lowenthal. Lowenthal, aye. And that's 10 to 0.
That's 10 to 0. We'll keep that open. Please use the item numbers too, please. Do you have them? Do you have them? Okay.
Item number 6, AB 350. The vote is 8 to 0, calling the absent members. Harmon, Lou, Lou, aye. Lowenthal, Lowenthal, aye. Price. And that has 10 to 0.
10 to 0.
Item 7, AB 591. The vote is 3-1, calling the absent members. Cogdill, Flores, Harmon, Kehoe. Aye. Kehoe, aye. Lou. Aye. Lou, aye. Lowenthal. Aye. Lowenthal, aye. Price. Runner. That's 6 to 1. That's AB 591, sir.
Number 7, that has 6 votes. We'll replace the call on that. Runner, aye.
Runner, aye. And that's 7 to 1.
And that's 7 to 1, so that bill is out. We'll keep it open for some of the other members. Which one?
AB 764, we just voted on that.
Just voted on that one. Let's just go to Ms. Torres then.
Okay.
Okay,
Yeah.
do that one.
Okay. Item number 12, AB 800. The vote is 5-0 in calling the absent members. Flores, Harmon, Kehoe. Aye. Kehoe, aye. Lou. Aye. Lou, aye. Lowenthal. Aye. Lowenthal, aye. Price. Runner. Aye. Runner, aye. Sorry. That's 9 votes.
That has 9 votes. Measure passes.
Item 15, AB 1160. The vote is 5-3. Calling the absent members: Flores, Harmon, Kehoe. Aye. Kehoe, aye. Price. And that has 6-3.
6-3. We'll keep that open.
Item 16, AB 1200, calling the absent members. And the vote is 8-1. Flores, Harmon, Price.
Is Harmon gone? Do you know?
Yeah,
Harmon's gone. Does anybody know if Mr. Flores is gone?
I don't know.
Okay, we'll keep that open. Now, Mrs. Torres. Yes.
Excuse me, just can you tell me?
It's Jones. She's doing Mr. Jones's bill.
I'm a principal co-author. And the same thing with 8764.
We just heard that one.
Did I? Oh, and I voted on that one. Okay. So the only two after the Jones.
That was.
We only have two left: AB 725 and AB 745.
Okay, before we proceed, I just want to make a clarification. The last bill we heard and voted on, AB 764, had the amendments are going to be taken up in judiciary.
Okay.
Okay? Ms. Torres?
Good afternoon, Chairman and members. The California Low-Cost Automobile Insurance Program provides affordable auto insurance option for very low income and good drivers in California since December 2007. The program has been available to qualifying motorists in all 58 counties. Assembly Bill 725 is sponsored by the Department of Insurance, and it would extend the sunset date for the California low-cost automobile insurance.
Bill's been moved.
Bill's been moved.
Okay.
It would extend the program from January 1st, 2011 to January 1st, 2016. I respectfully ask for your aye vote.
Thank you. Senator Cox, did you have a question?
Thank you, Mr. Chairman. More than just a statement.
Yes.
This is one of those bills that I had the opportunity to vote on. I was the only Republican to vote for this particular bill. Was the machine. And then when it was expanded, I was one of the Republicans that voted for this bill. Let me tell you, while I have some very serious concerns about this bill, if you all will look at your analysis, you will see that from a marketing standpoint, I believe you would have to say that this has not been a successful marketing effort on behalf of the Department of Insurance. And I'm appreciative of the fact that Commissioner Poizner has done his best to, in fact, boost up this. There are dollars that come into the department which are used for the promotion of this program. But let me just give you some numbers if you haven't looked at them. And I do, in fact, believe that the numbers speak for themselves. I don't think, however, we can extend the sunset of this program to 2016. I certainly would ask the author presenter on behalf of Mr. Jones to consider a smaller extension, perhaps just 5 years or 4 years. But it does say that as of 2009, the annual report to the January 2009 annual report to the legislature shows there are approximately 5,400 active agents and producers in California who are certified. In other words, to sell this particular program, you have to be certified. This number, by the way, is 1,000 less than it was a year ago. Essentially, the report points out that this is a result of certified agents not wanting to write the program, so they have dropped their CARP certification. So they will not be required to, in fact, write this this particular policy. When you look at the number of policies that have been written, let me just give you the numbers. 2001, that's when the bill was, the program was made available, was 1,116. Moved up to 2,390 in 2002, skipping on to 2005, the number was 5,991. 2006, 6,216. 2007, 8,144. 2008, 6,306. And year-to-date, 2009, 531, they have 3,135 policies that are in force. It appears that for the year 2008, that the number of policies in force dropped from 11,000 to 10,006, actually 11,385, which is almost a 7% drop if you lose some 700 policyholders. It seems to us that it is a situation that this, my guess is this legislature is not going to eliminate this program because we don't have a history of eliminating programs, whether they're good or bad. But I would ask the representative of the author to accept an amendment that shortens the sunset from 2016. I believe that's the number, is it not? 2016. 2016. And you just move it to a 3-year or a 4-year sunset, simply to give a new insurance commissioner, actually move it to 2013, which would give a new insurance commissioner the opportunity to try to gin up the number of policies that are written, because in the final analysis, if you were to take this to the marketplace and have someone analyze the results, you'd have to conclude that this program is not successful. And even though it's being, there's not a significant subsidy by the insurance industry, it simply is a fact that an individual can go to the individual marketplace and do better than they can with the low-income policy. So if the author's representative would take a sunset to 2013, I would be willing to vote for this one more time to give the commissioner the opportunity to see if they can gin up the numbers here.
Thank you, Senator Cox. And while I very much appreciate your comments and input, I think that you're absolutely correct. We have not seen a commitment from the department to really enforce and publicize that this very low insurance is available. I just want to highlight that there are currently 10,619 policies in force today. This program is very restrictive.
The numbers that the department has.
I do too. You might be citing from new policies. These are 10,619 families or individuals are currently. This is the number of policies that are in force today. This program is very restrictive. It's only available to very low-income families, to very good citizens in good standing with no misdemeanors or felony conviction records. They cannot own an automobile that is worth more than $20,000. And for all of those reasons, very few people qualify for this program. But in my district, it is a desperately needed program. We have families, individuals that drive 50, 60 miles one way to their jobs. Without this, they would not be able, as I myself was driving that distance one way to work, working the graveyard shift. If you're looking at public transportation, that is not available. Although I would not qualify for this program, obviously for low income, for the income requirements, there are many other people in my district that would. And I would respectfully not accept, decline your proposition.
You're not willing to accept a sunset date of 2013.
No, sir.
Okay. All right.
Mr. Cox, don't make me bring Senator Cedillo in here to debate with you over the need for these.
There's no doubt. There ought not to be any doubt in your mind, either, Senator, that you can get, for the same amount of money, you can get a policy that's better than what's being offered by the state of California under this particular program. And I just simply say that if this were a business and we were sitting around in the private sector and we were looking at the results of these particular marketing efforts, the number of policies currently in force, and I believe the number is 10,000, I was mistaken about that, 3,135 have been written new this year, which tells you that there is a very high lapse ratio or drop of coverage. There wouldn't be, this committee, this board wouldn't hesitate 5 seconds in eliminating this particular program. And I'm just simply saying, hey, I'm willing to let that new commissioner have a shot at this, trying to pick it up and extend it to 2013, but to just give it a free ride out to where it's being proposed is just simply just defies reason and common sense.
Thank you. Before we go on to support testimony, I'd like to just bring your attention to the analysis on page 3, number 9. I mean, there is evidence. A recent study of the Insurance Research Council did in 2008 finds there is a need for this program. There's a very strong correlation between the percent of uninsured motorists and the unemployment rate, estimating that a 1% point increase in unemployment rate is associated with a 0.75% increase in the uninsured motorist rate. So consequently, based on current unemployment trends, the percentage of uninsured motorists in California and other states is expected to rise. So I think that shows us there is a need for this.
Mr. Chairman, do you know how many uninsured motorists there are in the state of California? And this particular program takes care of 10,000, and there's 3 million uninsured motorists in the state of California?
Support?
So, David Link with the Department of Insurance. Senator Cox, as we briefly discussed yesterday, the concerns that you have are concerns that we have too. The number of people, the number of agents who are out there, they don't really have as much incentive to sell this as they do full market price policies.
They can't make a living selling the product.
Right. And these are concerns of ours as well. Of the 3 million uninsured. Remember, not all of them will qualify for this program, which is only for low-cost folks. But in any event, these are definitely concerns that we have, and we fully understand that. It was only last year that the program was expanded to the full state. We have Heather Lambert here, the Deputy Commissioner, who is in charge of the program, who is in fact working on these issues. Heather may want to say a word.
Why is the department, Mr. Chairman, why is the department so reluctant to have some accountability with respect to this program? All I'm suggesting is that you extend the sunset to 2013, you get to measure it again, you don't take it all the way out to 2018. I think that's what they want the sunset to be. Just simply an accountability factor.
16 in this bill.
Through the chair.
Yes, sir.
Mr. Cox, do you know what the percentage that 3 million would result in, or translates into what percentage of drivers being uninsured in our roads? Do we know?
I don't know the answer to that.
3 million equal.
There's consultant says that there's 24
million
registered vehicles, and there's what? 21 million what? Insured. 21 million insured.
20. Okay, thank you.
So 3 million of 24 million.
Yeah, and the consultant tells us it's under 15%.
Thank you.
Mr. Correa.
Okay, is there any other testimony in support? Opposition? Any other comments or questions by members? We have a motion. So moved. Call the roll.
Calderon.
Aye.
Calderon, aye. Cogdill. Correa.
Aye.
Correa, aye. Cox. Cox, no. Flores. Flores, aye. Harmon. Kehoe. Kehoe, aye. Lou. Lou, aye. Lowenthal. Lowenthal, aye. Padilla. Padilla, aye. Price. Runner. Runner, no. It's 7-2.
7-2, the bill is out.
Thank you very much.
You're very welcome. Thank you. Assemblyman Cotto.
This is the last one, right?
This is the last bill, and then we're going to open the roll for most likely just you, Mr. Flores. Been holding it for you. Thank you for your patience.
Thank you, Senator, very much.
It's been a tough day for all of us.
Senators, members, this bill requires a third-party administrator of a self-funded dental plan to include in the explanation of benefits document and the benefit claims forms the contact information in the event the consumer has a payment dispute with the plan. Such explanations and claim forms are already made available to those enrolled in private insurance dental plans. This bill merely extends the right to a similar notice to consumers served by self-funded benefit plans. The bill contains information about who consumers may contact at the Department of Labor if they have a dispute about billing or services. I have with me today Michelle Rivas from the California Dental Associations, who are the sponsors of the bill, to testify on behalf of the bill and answer any questions you may have.
Thank you, Mr. Cotto. Before you testify,
I just want to move the bill.
Move the bill.
It's a good bill. It has support on both sides.
Okay, good.
And airplanes to catch.
Good thing to know. Ms. Rivas?
With that, I will respectfully ask for your aye vote.
Thank you very much. Wise decision. Any others in support?
Third.
Opposition. Please come forward.
Jason Gapper with the Association of California Life and Health Insurance Companies in opposition. We understand the need to keep consumers informed. That is why most of our companies nationally have information in their employee booklets or other documents that explain to the consumers that it is a dental plan, it's self-funded, and explains their rights concerning claims payment disputes. In addition, the EOBs usually contain a standard formats for all states, and we're just afraid that forcing it to and changing it to make it the EOB state specific, which also includes identifying the appropriate assistance phone number, is going to be burdensome and costly for our national plans. For those reasons, we are opposed.
Okay, thank you. Any others in opposition? Seeing and hearing none. Any more comments or questions by the members? Motion? So made. Call the roll.
Calderon.
Aye.
Calderon, aye. Cogdill. Correa. Cox. Flores. Flores, aye. Harmon. Kehoe. Aye. Kehoe, aye. Lou. Lou, aye. Lowenthal. Aye. Lowenthal, aye. Padilla. Aye. Padilla, aye. Price. Runner.
Correa,
Runner, aye. Correa, aye.
Thank you, Senator.
That has 8-0.
8-0. That bill is out. Please lift the call on the other.
Thank you.
All those of you that have voted are free to go.
Have a good weekend.
Thank you very much.
Item number 1, AB 33, the absent members, Harmon and Price. That has 10-0 votes, and it's going to B&P.
Flores voted on that one already?
Yes, he did.
Okay.
Item number 2, AB 34, Flores. Aye. Flores, aye, and that has 10-0.
10-0. The bill's out.
Okay. AB 260. He voted on that one.
What item numbers?
That's item number. No, that's item number 3. The vote is 7-3, and the absent members are Harmon and Price, and that's 7-3, and be amended in judiciary.
7-3, amended in judiciary. The bill's out.
Item number 4.
Okay.
AB 299. The vote is 10-0. Calling the absent member, Flores. Aye. Flores, aye. That vote has 11. Measure has 11 votes. 11-0.
11 votes.
It's going to appropriations. Item number 5, AB 328, that's the consent calendar. Calling the absent member, Flores. Flores, aye. That's 11-0. Okay. Item number 6, AB 350. And calling the absent members, Harmon and Price, and then that's 10-0. Do pass to judiciary.
Do pass.
Item number 7, AB 591, calling the absent members. The vote now is 7-1. Flores, Flores, aye, and that is 8-1. That's due pass to health.
You're doing fine.
Item number 9, AB 725, Jones. The vote is 7-2, calling the absent members Harmon, Price, and that is 7-2, and it's a due pass to appropriations. Item number 10, AB 745. The vote is 8-0, calling the absent members Harmon, Price, and that measure is out, and it's going to Senate floor. Item 11, AB 764, vote is 5-3. Calling the absent members, Correa, Flores, Flores, aye, and Price, and Harmon, and that vote is 6-3.
Hold on. Keep that open. Keep going.
Item number 12, AB 800. The vote is 9-0, calling the absent member Flores, Flores, aye, Harmon, Price, and that vote is 10-0. Do pass as amended to appropriations. AB 866.
That was consent calendar.
That's the consent calendar.
That and the next one you've already got. Consent.
Okay, thank you.
Item 15.
Okay, item 15, AB 1160. The vote is 6-3. Calling the absent members, Flores, Flores, aye, Harmon, Price, and that has 7-3. That measure is out. It's due pass to judiciary with amendments taken to judiciary. Item number 16, AB 1200. The vote is 8-1. Calling the absent members, Flores, Harmon, Price, and that has 8-1. It's a due pass as amended to the Senate floor.
Okay. Call the roll again on item number 11.
Item number 11, AB 764. The vote is 6-3. The absent members, Correa.
Aye.
Correa, aye. Harmon, Price, and that is 7-3. And that measure is out as a due pass. Amendments taken in judiciary.
Oh, yes. That concludes our committee hearing for today and all of our business. Thank you very much.